Hello, and welcome to the February 2026 Real Estate Market Update brought to you by the Raby Homes team. Let's start with a quick national overview of 2025. Mortgage rates saw a nice downward trend from January to December, ending the year in the low sixes, which is where we remain today. So that was a nice step in the right direction. Price growth cooled off a little bit. The national average was about 2.3%, but that looks different depending on where you are in the country. Some states had minor dips, those are the orange states, while others saw improvement. The darker the blue, the higher the appreciation rate. Inventory is gradually climbing, and we're seeing levels closer to pre pandemic. The white line is 2025, the colored lines below it are 2020 to 2024, and the gray lines above it are the years leading up to 2020. So approaching historical norms in terms of inventory, but not seeing anything drastically crazy by any means. These gradual shifts are all positive for buyers, but shouldn't scare sellers either. But let's take a look at the forecast for this year. Senior economist for Realtor.com, Jake Krimmel, says we anticipate affordability will improve modestly on average in 2026. This results from our expectations of slightly lower interest rates, only modest increases in home prices, and a more balanced market than in recent years. But what actually affects affordability? Rates, prices, and wages. Stable rates and home prices coupled with increasing wages makes for better affordability. So what are rates expected to do? Well, according to the forecast from Fannie Mae, MBA, and Wells Fargo, they're expected to remain stable or continue modestly declining through the end of 2026. Home prices are expected to increase ever so slightly with an average consensus of around 1.6%. Keep in mind, though, this varies state to state, but it would still be considered stable. And finally, wages are expected to outpace home appreciation yet again this year. This study conducted by Redfin shows the year-over-year changes in median sales price versus wages going back to 2018. The blue bar represents wages and the green bar is home prices. Since 2022, wages have been surpassing home price growth, and with that expected to be the case in 2026, we have a recipe for improved affordability. Deputy Chief Economist for First American, Odetta Cushy, says this: national active listings remain higher than a year ago. Looking to 2026, the direction is still up, even if the climb is steady rather than steep. Life events nudge more owners to move. The lock on all those existing homeowners with sub 4% mortgages loosens at the margins, and completions add more options for buyers. New construction, although is expected to tick down a bit as builders are sitting on a good amount of inventory, the average annual supply dating back to 1990 is about 1.35 million units, and the forecast for 2026 is around 1.25 million units. This is projected based on the number of permits pulled to build, and that tick down will contribute to the more gradual increase in inventory, but housing in general will remain slightly undersupplied. Bottom line, well, Chief Economist for Bright MLS sums it up well. While lower mortgage rates and more inventory will bring some buyers back, this will be a reset year, not a rebound year. Market performance will hinge on local economic conditions, making 2026 one of the most geographically divided markets that we've seen in years. So, with that, let's take a look at our local market here in the Phoenix metro area. Some good news in our employment sector. Wallet Hub conducted a study that compared 180 cities across the country and named Scottsdale as the number one best city in the country to get a job. They looked at both job availability and socioeconomic growth. Additionally, Chandler, Gilbert, and Tempe were also listed in the top 30. Strong job growth brings people, and people need housing, so this is good for our local housing market. Inventory is climbing slowly and following a similar pattern to last year. This graph shows annual active listing activity going back to 2022. As of the end of January, we're sitting around 22,000 active listings. That's up 10% from this time last year and 11% from last month. So buyers, your options are growing. An increase in inventory this time of year is not uncommon because the weather's nice enough for buyers to be out shopping, and those who are waiting out the holidays are now ready to go. Median sales price is down about 1% from this time last year, which may be discouraging for those who bought in the last 2 to 3 years. But if we zoom out to 2017, values are still quite elevated. Those who bought prior to 2022 are likely sitting on some equity. And of course, this varies city to city, so let's take a look at that. This map shows the median sold price across the valley. The color key on the left shows the median price range for different zip codes. The blue and light green colored areas are homes between 400 and 600,000, so that's Gilbert, Chandler, Tempe, and Mesa, or parts of it. The darker green areas in South Chandler and parts of Scottsdale are inching closer to that $700,000 to $900,000 range, and the orange and pink, not to be confused with the light purple down south, are going to be that 1 million and up price point in North Scottsdale and parts of Phoenix. Each of these zip codes have different appreciation rates, so if you're curious what your area looks like, please don't hesitate to reach out so we can get you that information. Average sales price per square foot as a whole is up and has been consistently increasing since August. The red circle is the peak of the frenzy back in April and March of 2022, where price per square foot was at 305. It's been pretty volatile after that with no major swings in either direction, but as of December, we've gotten back to that 305 a square foot mark, and January surpassed it at 317 a square foot. However, again, this changes based on zip code, so let's look at a few different examples. This is Chandler 85226, and from that same peak in summer of 2022, where the average price per square foot here reached 321, it's bounced above and below that threshold until July 2024, where it hit 316 a square foot, and it's remained below that ever since. But if we take a look at Scottsdale 85251, we get a very different story. The frenzy or peak in the summer of 2022 was actually in September, and price per square foot reached 557. It then bounced around a little bit until January of 2025, where it increased to 607 a square foot and has remained fairly elevated with some minor dips in April, July, and September of last year. Gilbert 85233 was similar to Chandler. From the peak, there was a decent correction through January of 2023, and then a steady incline back up ever since with some expected seasonal volatility. So, different stories for buyers and sellers in different areas. Seller paid closing costs are still over 50%. It's trickled down a little bit since August, which was at 57%, and is now at 54%, with the average amount of concessions still around $10,000. But that's still over half of properties selling with concessions to buyers. So more inventory, stable prices, stable mortgage rates, and seller concessions still obtainable. 2026 is looking like it's going to be a great year for buyers. As always, if you have any questions, are ready to buy or sell, or just want some specific data in your area, please don't hesitate to reach out. We're here to help. Thanks so much for tuning in, and we'll see you next month.